I do really appreciate the opportunity to be here today. This meeting is one of three that I always attended because it affected the way I ran my own operation. I would take something back from it that I could utilize in either how I was going to manage my cattle, breed them, etc. And so I always came to this meeting, BIF, and I had to attend the Cattle Facts Outlook as well. But those were the three events that I didn't want to miss in a year. And as he mentioned, it's kind of strange where I'm more comfortable talking about the cattle cycle than I am the estrus cycle. So I'm not going to talk a whole lot about reproduction, but I think the key part of this seminar is that it is truly applied. And with that, the economics of this business becomes really, really important. And I think a lot of these technologies really boil down to is whether or not we can help those commercial cattlemen capture and leverage the value of the technology and the genetics they're putting into their cattle. And so today I'm going to make just a few points. They're probably not too revolutionary. But the first one is that the value of genetics has never been higher than they are today, and that we're seeing the value of those genetics grow exponentially in the marketplace right now. And to kind of make that case, I think we're seeing several things that's happening in our industry right now because of the genetics or why that value is increasing as much as it is. And the first of that is just simply the cost of inputs have been going up. So feed conversion becomes more valuable, for example. We're seeing carcass weight for $3 plus a pound, that sort of thing. So each additional pound of carcass weight becomes more valuable. And now we're also seeing record premiums for quality grade. All that, and then when you combine it together, we're just seeing the value differences for good genetics at levels we've never seen before. The slide below here just shows this on a 920-pound carcass. Actually at a choice select spread or premiums that would be a little lower than they are today. But the difference between a select carcass and one that goes into the certified Angus beef brand or qualify for that on a 920-pound carcass, that's $341 per head, just on that alone. And I'm going to show you a little more about that in terms of the value of genetics right now. When you take feed conversion, and we're going from 5.5 to 6.5 to 1, just taking a pen of 100 head of cattle just to kind of illustrate the value there, that's over $20,000 or $200 per head improvement by moving that feed conversion from 5.5 to 6.5 to 1. And we see that every day on closeouts pretty dramatically. We talked about the value of carcass weight at 285. When I put this slide together here 6 months ago, that was a pretty good price. We've exceeded that quite a bit here and there. But the difference between going from 900 to 950, and keep in mind the average carcass weight's about 926. So we're just talking about not the extremes of the population here, just normal variation we see. That's $142 per head. And then marbling, and this slide gets a little hard to follow. When I put together the two extremes of the population, it looked too good. So I went back and I took the industry average. So we're looking at about 14% select, 44% CAB in this second group, or choice, 36% CAB and 6% prime. And we compared it to a really exceptional set of cattle. They went 50% CAB and 38% prime. But again, we're seeing lots of closeouts that would match those two sets of cattle. That difference is $195 per head on the grid. So if you combine those, we're talking well over $600 right there, just on the terminal traits. And we're really talking about comparing average cattle to above average. Oh. And I think sometimes, too, we maybe take the wrong look when we look at the value of genetics because we only look at it on an individual basis or a pen closeout basis or that sort of thing. And what really excites me when we look at the value of quality grade is and some of these other traits is what it's done to overall beef demand as well. And these next couple slides, I just kind of want to make that case. The purple line is the prime to choice spread that we've seen over time. And you can see from 2002 to where we are, well, this is 2023, it would continue to go up here in 2024. Those premiums are increasing. The red bars is the choice to select grid, not as dramatic, but the trend line is the same. We're actually seeing the choice select spread increase over time. Now that probably doesn't say a whole lot in and of itself until you look at the supply situation as well. And this graph shows the percentage of cattle that are choice or prime over time. And there's a couple things I want to point out with this graph. One is just how much better we've made the cattle over the course of time, how good our genetic tools have been. But if you look in there about 2012, which was kind of the low point of our last cattle cycle there, you look at the jump that we made as we went into 14 and 15, 6 to 7% jump in the percentage of cattle grading. If you go back to the last cattle cycle around 2006 and 7 where we bottomed out, you'll see another really quantum leap in terms of the cattle. As we turn those over, as we go back into expansion, we replace them with better genetics, and we see that really bounce up again. I think we will see something similar here as we go into expansion in this next cattle cycle as well. But when you look at where that's happened, is we've improved the quality grade, we've increased the number of dollars coming into the industry, we've also increased overall beef demand. So it's not just about the premiums that we've seen for these cattle, but it's that we've actually seen more dollars coming into this industry. So it's raised the base price as well as the premiums. And that's what really excites me. Here, if you look back at from this cattle facts slide, since about 1980 to 2000, our industry was a break-even industry. All the profitability for all the segments was about $32 per head over that time. Not a very exciting business. You look at 2000 to 2012, the average profitability in the industry moved up to about $150 per head. And remember that last graph where we've seen that choice select spread and all that increase so dramatically? Since that time, well, over that whole time, we've averaged over $300 per head, but in the last 5 to 6 years, it's been about $500 to $600. As we continue to improve the quality of our overall mix, hit consumer demand, I think we will continue to see this move forward. Now, I would be remiss not to point out that if you look in here too, during this time frame, that yellow bar is how much the packer made. Yeah. So it's not all evenly distributed. Over time, that gets distributed there too, and hopefully we have a little more even distribution of those profits. But I hope that kind of makes the case of just the importance of genetics and the significant amount of variation that we're seeing with genetics. And so with that, I'm also going to make the case that our current marketing system with the commodity-based system really wasn't sufficient to send the right signals to improve quality and to make the right kind of cattle. It worked really well for yellow number 2 corn. It's all the same. And the commodity system does a great job of allocating supply and demand and sending price signals that way. But it doesn't do a good job of sending the other consumer signals in terms of the product that they want to purchase. And thankfully for us, beef is not a commodity. It's not yellow number 2 corn. And I still remember I was in college and my professor called on me to read the definition of a commodity market. I scrabbled through my book and I grabbed it and it said, in and over time, prices hover in and around break even. And you think about it, in and over time, prices hover in and around break even. That is not a very exciting business to be in. And what all businesses that are successful do is they increase margins by differentiation or differentiating their product in the marketplace. Otherwise, we just get into a spiral of being low-cost producers where that bar continually gets raised and we end up with the buzzwords in our industry: concentration, consolidation, and integration. That's what a commodity market will end up doing if we don't differentiate our product and sell on the basis of value. And I argue hard here that so with the commodity system, we have all these segments basically competing against each other, with everyone putting a finger on the scale trying to bend it in their favor. And when we were engaged in this system, we were losing market share to pork and poultry, and if we're going to compete on a cost basis, we don't compete very well with those things. We compete very well when we compete with them on a quality basis. So the industry did. I'm going to age myself. When I stood up here today too, I used to always want to be on these panels here, and when I was younger, I was thinking, oh, I will someday be older and I will be smarter than these guys. Right, or as smart. That was my goal. And then I see Pedro and Troy and all these guys, and all I realized is now I'm nearly twice as old and they're still twice as smart. So it didn't work out. But with the National Beef Quality Audit, we saw that we had these deficiencies in quality. We saw we weren't meeting consumer demand, and the industry really did set out to change the way we market and sell our cattle. And we did an amazing job. The seed stock industry, with their EPDs, market their cattle every day on a value-added basis. If you take the feed yards, 80% of the cattle now are selling on a formula, contract, grid basis. They're getting paid for quality grade, yield, carcass weight, et cetera. Not only that, they get the advantages of health and feed conversion, and they realize that. The packers, we always had the USDA grading system. We had the branded Revolution, certified Angus beef, and all the other products that are out there, and they're selling on a differentiated basis every day. Of course, the HRI trade does as well. You know, they're selling their product high. The key to this whole system is the cow-calf guy. They're the one who controls the factory, makes all the decisions, and they've responded to all these other things in a great way. But for the most part, we have left them out of the value-based marketing revolution. They were still selling their cattle primarily on a commodity basis. Yes, we are seeing the price spreads between cattle increase. We are seeing reputation cattle bring more than others. But the problem with reputation cattle is you have to have a feeder that's bought your set of cattle, and then another one that's bought your set of cattle, and they know they're healthy, and they feed, and they gain, and they grow, and all that. And then you have to have them both want the same set of cattle on the same day and be at that sale barn or wherever it may be. Reputation is hard to duplicate. And so when you put all this together, and you look at value-based marketing, I like this slide, and I can't tell you where I stole it from, but there's really three parts of it. There's the value creation side, where it's very consumer-focused. That's where we see all the innovation of these products and different things. Then there's the capturing value side on the other side. That's where we differentiate it. That's the branded products. That's what we're doing there. In the middle here is the value quantification side of it. And that's where we take the genetics, the management, and all the information that goes into that system to manage those cattle right and to hit those targets appropriately and send the right signals. And that value quantification part, that was where the system was hung up. And so as we said, the cow-calf segment, that's the last domino to fall to really move us towards a value-based marketing type system where we're sending the right signals for quality and value throughout. And so taking a step back, we do know what are the value drivers in today's system. Lot size is number one. If you take your video sales, any of those on a given day, and you do a simple regression analysis, the size of the lot will be the number one determiner of price. Why is that? One, they get what they hope is a consistent product. Two, they don't have all the issues with commingling. They can manage them appropriately. More information about those cattle. Number 2 is health. We hear a lot about health. Whether or not the cattle are going to stay healthy, that's a big driver. Do any survey with feed yard guys, and health will be the number 1 concern that they have when purchasing a set of feeder cattle. Then we know condition, how fat they are, what condition they're in, and then of course we always see steers sell at a pretty good premium to heifers for obvious reasons. For the most part, those top 3 are either out of our control or we know the answers. We know how to get the cattle managed from a health standpoint, proper nutrition, vaccinations, etc. This next one is access to markets, and it's played a much bigger role here the last 5 to 10 years, and that's all these different program cattle we talk about, whether it be NHTC, All Natural, GAP, CARE, all these different programs out there. If you have a set of cattle, the more access to markets, the more markets you have to compete, the more buyers you have, the more marketing opportunities they present. And we have seen really good returns on investment for those programs, if they work for your management scheme, they're a pretty good option. And that comes back to marketing flexibility and management. You talk to that feed yard guy 5, 10 years ago, and he's like, I don't care about genetics because I can manage them. I can feed them all to convert. I can feed them to get grade. And their argument was, especially the big guys, when you talk to Cactus or Five Rivers or Freota and those, and they would say, and I buy so many, I'm going to buy average anyway. So I don't care about that. You guys just keep making them better, and I'll manage them. That's changed, and we'll talk about that too. The other one is risk mitigation. As prices have increased, all the inputs, all the things we've talked about, risk has actually gone up and market volatility has increased. So how well you manage your risk becomes more and more important, and especially with the dollar amounts of these cattle now. We had yearling cattle this spring or in summer that were $2,500 first cost before they ever got to the feed yard. Imagine some of these complexes that have several $100,000 of those on feed, what that costs. I would argue that genetics are the best risk management tool we have in the industry right now. There's a term out there that everyone likes to use, and they call it the genetic hedge. But most of these cattle that we're buying or seeing sold, at the day you buy them, if you were to go lock them in onto the board that day, you're buying a loss. But you're not buying a loss if you're buying the better cattle. You know, on the grids, we're seeing an average premium of almost $90 per hundredweight. So if the average calf's losing 40 and you're buying a calf that's returning 90, you're actually buying a $50 profit on the day of that. And that's what a lot of these guys are seeing. When I mentioned at Cattle Facts, we used to say genetics were 35% of the profitability equation. Management, health risk, was the rest of that. Just environment, all the other things that you really couldn't account for. And that made sense to me because when you look at these terminal traits, growth, feed efficiency, quality grade, all those things, they're about 35% heritable, 30 to 40 depending on the trait. And so I would argue, yeah, a third of the difference that we see in profitability is due to genetics. Today, as I study the closeouts, and this is one of my radical takes, is that that's no longer the case. The genetics are probably making up 70% or close to 70% of the difference that we're seeing in profitability. And that's simply because we've gotten so good at managing the cattle, and at all these big feed yards and all the other places, they're doing everything right from a management standpoint. A lot of these other traits now are table stakes. If you don't have your health taken care of and you don't have your risk management program in place, you're going to be out of business. The ones that are left, they're doing that extremely well. So genetics are becoming more and more important in terms of differentiating who's making money and who's not. So with all that said, we really had a simple vision at the American Angus Association, and that was, okay, we know the problem. How do we get a system where we reward the cow-calf guy for the investment he's making in superior genetics? And we really had two goals. One was to put more dollars in the pockets of commercial cattlemen, and how do we build relationships throughout the system so we exchange information and continue to make cattle better over time. We knew that was going to require a little bit of a paradigm shift. And what they did, and this will sound a little bit like a commercial for Angus Link here the next few slides. I don't want it to be that. I want you to take it in mind that this is a system that works for all cattle, and a system that can be employed regardless of the breed. But we have two programs. One's Angus Verified, and that simply helps those customers differentiate their cattle by documenting that they're out of 100% sired, Angus sired cattle that have been registered and transferred into their names. And they have to be agent sourced to be part of this program with an EID. We document that those cattle are actually their bull battery. And if they do that, they get to carry the Angus Verified logo. What I'm going to talk about mostly is the second part of the program, and that's the genetic merit scorecard. And that takes the differentiation to a whole nother level. We're not just talking about what breeds of cattle are represented, but what their actual genetic merit is for that pen of feeder cattle. And so what we do is we take that sire battery and all those EPDs from those bulls. Again, they don't have to be Angus sired. They can be Charolais, Sim Angus, Gelbvieh, Hereford, whatever it is, using the Meat Animal Research Center adjustments and historical sire information. We are essentially calculating an EPD for a pen of feeder cattle for the three traits: feedlot, grid, and beef score. Feedlot says how the cattle are going to do in the feed yard. It includes weaning weight, yearling weight, residual average daily gain, dry matter intake. Grid score is how the cattle do when they're hung on the rail, driven primarily by IMF and carcass weight, but also ribeye area and fat, of course. And then the beef scores are combined, how those cattle do from an economic standpoint, both in the feed yard and on the rail. The kind of unique thing about this scoring system is that it goes from 0 to 200, with 100 being industry average. So if you're a buyer, you can see how those cattle rank within the population. Each and every year, that industry average changes. So it's also a benchmarking tool. If you have a 125 this year, you're well above average. You have a 125 next year, you know you've kept up with the industry. Now, if you're 140 and you went to 130, you still have really good cattle, but the industry's been moving at a faster rate than you are. You're actually losing ground relative to the rest of the industry. In addition to those three scores, this last year we've added a maternal score just because as we start to go into this expansion phase, and a lot of people were wanting to market that with replacement females as well. So the difference with the maternal score, or the additional box there, is it is not multi-breed. We can only do it with Angus cattle. We don't have the crossbreed adjustments among the breeds for the maternal traits. It's a much bigger index with like 14 different traits. And we really don't have the capabilities of making the comparison with the other breeds in there like we do with the other traits. But the question is, does it work? And this is on some validation data of about 120,000 head. And as I mentioned, 100 is industry average in here, and we don't actually have the 100 line. But if you go down that, it's about 14% select, 36% CAB, 8% prime, pretty close to what the industry average is today for those traits. This is just looking at quality grade. And if you go clear out here to 165, the green bar is the prime, blue would be upper 2/3 of choice or CAB, yellow is choice, and then the red line select. But as you go from that here, from the extreme end, you have 68% of the cattle either select or low choice at an 85, and at a 165, 88% of the cattle are CAB or higher. And if we put those trend lines out here on all this validation data, for carcass weight, ribeye area, fat thickness, feed efficiency, you can see just a beautiful linear graph. It does a really good job of predicting the performance of these cattle. When you talk about the value here too, I just took a 105 and a 145, ran it through our grid calculator. Considering carcass weight stays the same, which wouldn't be the case. We use the 920-pound carcass weight. The difference on a 740-pound steer in terms of break-even was nearly $10 per hundredweight. If you took that to a 5-weight, that'd be over $15 per hundredweight difference. And that's just based off a quality grade. So looking to the future, we're really excited with adding the maternal component. We're also seeing supply chains start to pick these up. Nationals actually included the genetic merit scorecard in their grid, so you're getting paid a premium for that score, as well as the additional premiums for quality grade, et cetera. One thing that maybe conversationally wise that we get to is that right now every economic signal is to make these cattle bigger and fatter. And we're feeding them beyond their ideal compositional endpoint from a biological efficiency standpoint right now. And for good reason. Your dollars and cents are telling you to do it. We are talking a lot about sustainability in this industry, and knowing where that intersection is, where efficiency and quality intersect, I think is going to become increasingly important as well. And that's where data and information are going to be crucial. As I mentioned, we get a mindset that just hires better with this scorecard, and everybody wants to have a 150 or higher and market those and get the premiums that they're seeing for those cattle in the video sales, et cetera. That's great, but the thing that always comes back to is two quotes. One was Tom Fanning with Pratt Feeders in Kansas, and he said, what the scorecard does is it gives me enough courage to pay what I need to pay for these better cattle, and I've loved that. And the second one was with Cactus Feeders, and they said, I just want to know what the score is. I don't care what the score is, because I can manage them appropriately. If I know what those cattle truly are when they come into my yard, I know how I'm going to implant them. I know what weight I'm going to take them to. I know if I'm going to put them on Experior or not. But it gives them information to make more money. I think essentially when we look at genetics have a role in increasing profitability, predictability, uniformity, and reducing risk at the same time. And that's where I wanted to bring up, I guess, this next point. A lot of times when we talk about genetics, we always just talk about genetic merit, genetic value, and these various traits. I think the most underutilized or talked about thing in our industry, and especially when it comes to talking about AI and some of these reproductive technologies as well, is yes, using an AI sire, you get more weaning weight, higher quality cattle, whatever the case may be. But you get a much more uniform set of calves. And when you look at our marketing system, I would argue that the main thing that the cell barn does, the stocker operator does, the feed yard does, and the packer does is aggregate cattle and to put them in a more uniform, marketable package. Because we can sell uniformity and market it much more effectively than the variation that we have out there, and we can manage it much better as well. Consistency and uniformity is crucial, and genetics play a huge role in that as well as management. But I do think when you take the entire production system, genetics' role in increasing or improving the consistency and uniformity of our product is going to be really vital as we go ahead. We mentioned benchmarking. From our seed stock producers, we see this really as a customer service tool. For our commercial cow-calf guys, we see it as a customer service tool too, in that it provides valuable information to their buyers. And it also serves from the feed yard back to the cow-calf guy because it provides an information flow where we can start to get feedback loops started. Of course, it promotes better genetics. As we talked about, the premiums have shown that having the scorecard has made a significant difference in what price being paid for those cattle. In the video sales this last year, we returned almost $18 million in premiums back to producers. That's comparing back to the Cattle Facts top of the market average. This year, we've seen record premiums for the cattle with a scorecard. That's going to exceed $30 million through the video sales this summer. Looking too on the future, and one of the things we had a discussion here at dinner, I think one of the things is that we're seeing, we have been given the tools to change these cattle and make them so good that we've also made them kind of extreme in some regards. Our best terminal genetics probably aren't great mama cows. And our great mama cows probably aren't going to produce that 1,600-pound steer that the guy wants too. That's yield grade 2 prime. I think we're seeing a trend to moving towards more maternal and terminal lines. We've seen it in other industries, and I think that's very well in place. So when we look at, I guess, the challenges and opportunities when we look at marketing the cattle going forward, obviously the average cow herd size is always a problem that we have to deal with in our industry. I think the scorecard, or having an objective, reliable way of describing the genetic merit of a pen and feeder cattle in a cost-effective way that works at the speed of commerce, actually helps us to aggregate and put these groups of cattle together in uniform load lots. We are always battling our industry structure and that commodity mindset. We've made a lot of progress in terms of awareness within the industry and adoption of that. I'll throw out here too, it's always controversial to talk about beef on dairy among cattlemen, but the beef on dairy revolution has done one thing for sure, and that's taught cattle feeders two things: the value of genetics and the value of supply chains. And I think that drives what we're talking about here down the road quite a ways. I do think we're finally getting to the point. What excites me most is that 3 years ago we had 50, 60,000 head of cattle with a scorecard. And you'd sit down with a cattle feeder and he would look at the data and that graph and he'd say, "Oh, I want some." And we'd say, "That's great, you can't have any because we can't get you any." Today, most of these feeders now have access to the cattle. We've got enough numbers, we're getting close to critical mass. And when you look at the other programs out there that aren't genetic related, they're based on scarcity, whether it be NHTC and all those things, in that the more you get of those products or cattle out there, the less the premium becomes. When we're talking genetics, the value of genetics does not go away. And when we talk about like the scorecard and this concept here, as it becomes more available, there becomes more numbers. It's like Facebook. If you have 3 people on Facebook, Facebook isn't worth very much. You get 1 billion users and Facebook's network is really valuable. And so the more we get, the more value we see in the scorecard. And I think that's what really truly makes it unique. And that's what makes genetics unique when we talk about differentiating the cattle in the marketplace. I will kind of end with this too. You know, we'll have this conversation. Well, where does genomics fit into that? And for example, American Angus Association, we have GeneMax Advantage. It's a genomic test for commercial cattlemen. Very valuable. The price point value of that, and when you are talking about marketing cattle, it's probably hard to justify. Where genomics really play a big role is if you're going to make selection decisions, then you can start to justify it. If you're going to make individual management decisions on how you're going to market those cattle, then genomics play a really key role. I do think we'll probably evolve at some point to having a genomically enhanced scorecard like we do with EPDs. But from a marketing standpoint, we can do a really good job with the scorecard, but we do it on a group average. It's that pen of feeder cattle. I can't help you select individuals out of that. If you're wanting to select your best 10 replacements out of 50 head, scorecard doesn't help you. It just tells you what those genetics are in that group. And I think that's where you see that interaction between genomics and kind of what we're trying to do with that scorecard. And so in closing, I think the scorecard concept has proven that we can create more value for cow-calf producers, put more dollars in their pockets, as we say. And I think we can help commercial cattlemen get rewarded for their superior genetics and management, that uniformity and consistency side. We have been able to create value and send the right messaging for those better genetics. And finally, and probably the most important, is there's an opportunity to create new relationships within that. So with that, I'll kind of wrap it up. Were there any questions? I'm sorry.
At what weight would you do a scorecard?
The question was, at what weight do you do a scorecard on? And actually, we can do the scorecard because they're agent source verified anytime before the cattle leave the ranch of origin. So we'll see. We can actually do a scorecard on those calves at birth if we have all the sire information and that already there. Most of the time, we're doing that prior to weaning, before those cattle get marketed the first time.
Any more questions? I kind of have one if you don't mind.
No.
So from a cattle cycle standpoint, right? Do you see any amount of variation depending on whether we are expanding the herd and as we see fluctuation in feeder calf prices, do you see fluctuation in the amount of added value that you're seeing with animals that have superior genetics?
Two great questions. On the expansion side of things, we're not seeing expansion yet. If you look at heifers as a percent of replacements going into the feed yard, we're still in nearly 40%, which is full-blown liquidation mode, actually. We need to get down below 35% before we really see expansion starting. So we haven't seen that. We have all the economic signals there: interest rates, uncertainty, age of producers, the fact that we got as low as we are, the fact that prices got as high as quick, and heifers are costing a lot. And so we're looking at a much slower expansion and build back than what we've maybe seen in previous years. On your question on premiums relative to the cattle cycle, we used to say when prices got higher, premiums would decline. Just simply because there wasn't enough dollars to spread around, and those guys wouldn't do that. We are not seeing that. We're seeing the premiums increase or maintain themselves for these different programs. The one exception has been the gap and all natural things been a little softer this year, but that was really a function of Tyson pulling out of that market, and so we lost some supply there. But really, as we've looked at it, surprisingly, these premiums have been continuing to stay the same or grow, even though the overall prices are trending upward. So, and I think when we go into the next cattle cycle, there's a lot of people that think things are pretty good. There's two sides to this. We talk premiums, but there's also discounts. And when the feeder and them get leverage, those below average cattle, they'll utilize that leverage.
Back on the slide where you had value-based market, the first thing you had up there was lot size. How can the limited resource producer, the guy with 20 cows, take advantage of this stuff without the ability to group them with other farmers? Other producers?
Yeah. When you're below lot size, it's hard just to get the buyers there to do that. So if you can participate in those group sales, consignment sales, board sales, where they have a group of those and they have a bunch of cattle coming in, like with the scorecard, where it just gives that, or a sell barn where they have a special feeder calf sale where there's 1,500 calves with a scorecard, they can put together load lot sizes of similar cattle and you can get some premiums there. But it does come down to less than a load lot. It is really hard to get premiums. And so we have to figure out a way to collaborate and bring those cattle together where we can get them in low lot sizes.
All right, let's thank Troy one more time.